Hey, good morning, everybody. Thank you for joining me pre-market on Wednesday. Understanding the ADP job numbers are coming out this morning. So why are futures gapping down overnight and what could happen in the market today? Well, futures are gapping down because Fitch downgraded the U.S. Credit rating from AAA to AA plus. What does that mean? It basically means that they downgraded the entire U.S. economy, that they downgraded the entire U.S. market. We know that when AMD gets upgraded, AMD goes up. When NVIDIA gets upgraded, NVIDIA goes up. When the entire market gets downgraded, the entire market is likely to go down. Now, overnight, we saw the first effects. We saw the Nikkei market, the Japanese market, drop by 2.36%. Okay, that kind of makes sense for me. Somewhere between 2 and 3% drop today. That's what makes sense to me. That's how my trading strategy is going to start off the day. Now, can it change? Yes, because I don't trade the market at 9:30 a.m. or in this case, because I have shit to do this morning, 10:30 or 11:30. In fact, my best trades yesterday, and we'll talk about my best trades yesterday, happened between 12:30 and about 2 p.m. And I'll talk about which way the market will go. But first, my trades yesterday, I entered yesterday 25 straight winning trades. My 2 trades going into yesterday, both losses. So my streak is over. Frustrated me, had to take a step back, was like, I don't even feel like trading. And this is a lesson to everybody, because when we're emotionally involved elsewhere and we're not focused on the market, we shouldn't be trading, right? You're focused elsewhere. You shouldn't be focused on, you're not focused on the market. You shouldn't be trading. Now, what did I do? Okay. Yesterday morning, again, took 2 losses, 25 in a row, winning trades, came to an end. So I sat back. I said, I don't want to trade. Then I was watching the market and I saw the SPY touch under, where was it, 455.83. And I said to myself, SPY calls. So I got involved with some SPY calls, 0 days till expiration. You know what? I would show you, but I can't show you right now. Actually, let's show you because I could have done the same trade 3 times. So let me just bring up Discord and we'll get into Discord. Then we'll get into the numbers today of the SPY and what I actually think is going to happen with the market. Let's see if I can just find this. Here we go. Matt's trades. Be nice if it worked. There it goes. All right. So here we go. Let me add this to the stream. All right. Add to stream. Okay. So yesterday, again, I was a little distraught because I had 2 Dow plays that opened up red. Let's remember, I'm a scalper, which means I get in during the day, out during the day, secure profit. Go back to Friday when I did not ride my plug calls overnight until Monday, missed out on 100% gain. So what did I do? As I closed green on Monday by $8, I decided, let me hold my positions to Tuesday. Something I didn't do on Friday. I missed out on 100%. So yesterday I took 2 losses to start the day and I was a little perturbed. And I'm like, I don't even feel like trading. My emotions were elsewhere. However, I'm still watching the market because I update the market. So as I'm watching the market, I finally found a good trade. Shoot. Did I not just get rid of that? I didn't. Thank goodness. All right. I finally found a good trade. I just moved it elsewhere. That's the only thing I did. Which were 456 calls expiring. I paid $48. I entered at 12.27. Again, I was taking about 2 hours off since taking a loss on my first trades. Extreme risk. Why? Because they expired during the day. Now, I bought them using my Morgan Stanley account. Why? Because Robinhood would sell my options if I were holding them at 3:30 p.m. Webull would sell my options at 3:30 p.m. to safeguard me. That's bullshit. Anyway, so I got in at 48. It was 47. Now it was 46. If my exit was correct, I was looking for $72. I added more contracts at $40. Again, risky. The market was dropping. I thought the market was going to rebound, and it did. So I set my exit strategy for $66. I ended up selling them, I think, at like $61 or $62. Here we go, $61. I took $918 profit to make up some of my UAL losses. Then I bought 10 more at 56, looking for round 2. Same exit, $66. 10 more at 50, so I'm in for 20 at 53. And then what do these do? They spiked above 71. I got out at 62. I did not get out at 71, but I got out at 62, and I made profit. Why is this important? Because the same thing happened at 1:35. They were $50 again. At 2 p.m., they were $76 again, and they went up to $105. So understand, as bad as my trading was to start yesterday, and I was emotionally drained, basically, I found some winning trades by sitting on the sidelines, by letting my emotions kind of fade away. So what do I see happening in the market today? Well, that's a great question. So as I mentioned, the Nikkei average was off overnight, 2.36%. Okay. The FTSE, which is the UK market, was off 1.3%, 1.26%. Our markets were down 1.5% overnight. The SPY was sitting at 451, which is down 1.5%. Understand the SPY right now is probably only down 0.5%, if that. All right. They're buying the dips pre-market. Now, here's the psychology behind that. Now, we talk about, okay, everybody has their different positions in the market. Calls are a little ahead of puts right now. So people that are seeing the market dip overnight, I believe institutions, investors aren't selling pre-market. What's happening is they're letting the market fade higher, and I believe the market will go down. So here's the question I pose to everybody. Do you think at 451 or 452 pre-market that we've seen the worst on the day? All right, pre-market's out of the way. The SPY opens up. We're sitting at what, 454 as I started this video, 453.74. We were 454, so let's just call it 454. Do you think the worst is already behind us? The market's going to open and it's going to get bought up. No, the entire market's been downgraded. You have large institutions that are probably looking to exit out or at least rotate out of some of their positions. They're not going to do that pre-market when there's no volume. So what's likely to happen is, I'm a big institution. I'm going to let the market open up at 454. If it wants to go up to 450, 450, 455, that's great because that's my time to sell. Sell, 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 sell. And the market drops. And then we think it's going to rebound a little at 10, 10, 15 when we see that slight rebound curve. And then when it does a double dip. Okay, so again, Japanese market off 2.36%. The European markets, I think it was the CAC, which is the French market, off over 1.2%. The English market, the FTSE off 3-4%. Point is, what is our market likely to do? Just common sense. It's likely to be off somewhere between 1.16% and 2.16%, somewhere between where the Japanese market fell, because the Japanese market, like our market, has been crushing it lately. Okay, so there's going to be a pullback or consolidation or even some selling and profit taking. So I'm actually expecting somewhere more significant. I'm expecting a 1.5, 1.6% pullback. So if I look at where the SPY closed yesterday at 456 and I take 1% of that, that's $4.50. If I add another 0.5%, that's another $2. That's $6.50, telling me $450 is in play on the SPY today. Now, I can show you the same thing. Let me just bring up the Qs real quick and tell you what I'm looking at as far as the Qs go. Because if we're thinking, okay, SPY is going to drop, why can't the Qs drop? All right, let me pull it up a little bigger for you guys. Okay, so let's go. Here's my SPY chart. I'm going out to the 1 hour chart. We see a gap up from 443 all the way up to about 445. All right, that's your first gap up. So we all know that gaps tend to fill. So let me just find the Qs first because that was a little easier, a little different scenario. All right, Qs, a little more shaky. We gapped up from 368. Boom. 371. Whoa, we were here. 374. We gapped up to what? 376. Okay. We found a level of support right here at 376. So what's likely to happen today? Well, shit, I think we're likely to test 376 on the spot on the Qs. So the fact that we're sitting at 379, even maybe 380 as we open up this morning, and I think we're going to drop over 1% to touch 376. Well, I know I could be bearish on some of the Qs or some of the larger proponents of the Qs, whether it be Apple, Tesla, Microsoft, Amazon, Netflix. Again, I want to find the stocks that are struggling the most. So I'll look at something like Google. All right. Google has outflow, inflow, outflow. All right. So there's more outflow on Google. So I would say, okay. And then I have my charts as well. So since you guys are looking at them with me, let's just go up to a Google chart right here. I'm looking at the outflow here, sold it down to 123. We're sitting at 229. We gapped up right here. Again, the top of these, we saw what right here when there was some buying, 126. So if I had to guess, I would say Google's probably going to hit under 127 today, maybe 126.65, 126.65. Google, that'll be my out. Okay. My in would probably be $130.50. Now, as we're sitting pre-market, we're sitting right under 130. Okay. I mentioned 130.50 cents because I'm looking right around this number right here where they started buying. So the same thing, they could offload it. Again, 130.30. Again, I don't want to jump the gun. Just because I call out a number, $130.50, doesn't mean that's going to be the high. The high could easily go right to 130, 134. The market could look to be bought up almost back to break even, and then it could sell off and we can see a 1.5% drop. So we can go up. So your scenarios, let me give you your scenarios for today. Scenarios for today. All right. The market right now is sitting at 454. I've got my dark pool levels. Okay, you know what? Let me just show you guys the dark pool levels because you could do this again for both the Qs and the SPY. So let's just get up here. That was my trades from yesterday. What do I want to do? Bum, bum, bum. I want to go to the flows room. Got it. I want to go to the end of the flows room so I can type in my my search. Let me just add this up so we can add it to the stream so you guys can see what I'm doing. Okay, so we got the flows right now. I've got Discord up. Sorry, it's on a whole nother window. Okay, so I've got the dark pool levels open for the SPY. So what am I seeing? 455.17, 453.47, 451.77, 450.06. Now, I mentioned that I thought if we're off 1.5%, we're going to touch that 450.06 level. So that's kind of what I'm looking at. 456.88, I'd be looking at the top level right here to reject. Understand yesterday's low, 455.49, which is right above the largest dark pool level yesterday. So we're going down to that level, and then the market got bought up right above that level. So it's interesting because this morning, now that we're opening below that level, I'm going to see if 455.17 actually rejects. Now we go plus or minus 20, 30 cents. So it could be 455.40, 455.50, but that's what I'm looking to reject. So I'm looking for the market to get bought up on open, reject that level, drop down to the next level, which would be 453.47. Remember, nothing goes straight up or straight down. So we'll test the 453.47. It'll look like it's going to rebound around 10.15, and then we're going to drop down to that 451.77 level. That's just my thought process for today. Again, if I had to give my bull case and my bear case scenario, let's let it rip right now, okay? So we closed at 456. Who cares what that is where we close? All right, so we're just under 454 pre-market. Your bear case scenario, which I just explained, is the market's going to get bought up within the first 20 minutes, and we're going to see it reject right around $455. I'm talking about on the SPY, 455.50. And when it rejects 455.50, I think we're going down 5 full points to $450 and small change, okay? That is your bear case scenario. Again, your bear case scenario, everything that happens pre-market is bullshit. Understand the big investors, big money, they wait till the market opens and they don't want to force something. If they force something at 9:30 a.m., sell, the market drops, they're still in a shitload of positions that they can't sell because they already forced the market to drop. So what we usually see at market open is they stand on the sidelines, market gets bought up, and then people are buying. Once it gets up to a nice point, 10, 12, 14 minutes into the market, they will start their selling. Okay, so again, the bear case scenario, 455.50, we drop down to 450 and small change. Now, your bull case scenario is nobody gives a shit about the downgrade. Who cares if they downgraded the market? I mean, again, I am not in this camp, but if you're in the buy the dip camp for today, okay, then you're saying, okay, well, we're getting a nice discount off open. If I'm going to buy the dip, then I'm going to look for the market to drop at open, all right? No spike, no nothing, no bought at open. It's just going to drop. Yes, this is your bull case scenario. Your bull case scenario is you got to get rid of all the weak hands. So the market drops, it drops a little more. You're talking about within the first 20 minutes, you're sitting at 453 and small change, 453.20 on the SPY, something like that. All of a sudden, you see support coming. You see volume, 500,000, million shares of the SPY, something like that, 453. Once you acknowledge that is the low end of the day, and they're going to buy the dip. You're watching AMD, NVIDIA, Palantir, United Airlines, Carnival, Wynn Casino, whatever you're watching, they're buying the dip at 453. If 453 flat is your baseline low, then we're going to see somewhere like 457.25 today, which was yesterday's high. Do I think we're going past that? No, but that's your bull case scenario. Bull case scenario is drop to 453, raise up to 457, fade higher the entire day, lighter volume. Your bear case scenario is get bought up at open, 450, 550, and then we're dropping down to that 450 level between 450 and 451. That's if I had to, and someone was bending my arm behind my back and forcing me to trade at open. If I was being forced to trade at open, I would look for that first spike and I'd be buying puts. All right. Of course, I'd want to go out extra days. If I'm just using today, there's a lot of volatility at open, so you're losing that time, plus you're paying more at open. The difference between the bid and the ask is pretty significant. So again, that is why I plan to wait. Again, my best trading was done. I was done with trading once I quit trading yesterday morning. I was done with trading from 12:30 to about 1:30, maybe even less than that, 12:30 to about 1:20. I was done in 50 minutes time. I had 2 different trades that produced over $1,200 profit for the day, stress-free. Remember, my first exit on those SPY calls was $66. I got it at 61. Second time, $66. I got it at 62. Both times those options went north of $1.04. Okay, so it's about taking profit. It's not about getting max value when you're scalping. When you're in a position that expires 3 months from now, yeah, you want to get max value when you enter and when you exit. Max value when you enter, meaning buying the best position, buying the best dip. If your entry point is so great, then you're okay with holding. So let's talk about what's going on. Let's say you have a bull case scenario, and let's say you have a bear case scenario. So I already said bull case scenario, we're going to dip to 453, then we're going up to 456, 457. So what stocks would you want to play under the bull case scenario? Well, shit, AMD beat earnings, was up to $124, is now probably flat pre-market or something to that extent, maybe up 1%. I would let it dip on open. Again, if you want to buy the dip on a stock like that, then I would buy those AMD calls. Again, the IV is going to go down because they already had earnings. Earnings are out. The stock already popped and then dropped. Okay. What else would I be looking to do? Bull case scenario. Again, if I was going to think something was going to turn around, I'd probably have to stick. I mentioned, I don't want to mention those because those are too dangerous for you all. Again, bull case scenario, I might look at a Merck, somebody like that. Bull case scenario, I'm just seeing what could actually flip around. The AMD's at 2. I would stay away from all those. I wouldn't be in NEO. I wouldn't be in Apple. Interesting. Starbucks earnings didn't disappoint me all that much. So I might do a Starbucks. I might do an Uber on that side. I did an AMD on a bull case. Now, a bear case scenario, you want to see something that is more spec play. So you might look at something like an Affirm, right? Well, Affirm's off 4% right now. But here's the case. The market gets bought at open. Affirm lightly traded stock, only 87,000 shares traded pre-market, and we know that it's been squeezing. So Affirm might squeeze on open back to $19.30. All right, that might be a point if I'm getting from 1881 to 1930, a 50-cent move at open. And we know things are very volatile open. I might say, okay, well, I know the SPY is going to hit 455 and then drop to 451. That's my play on the day. So I say to myself, okay, Affirm's going back up to $19.20, $19.30, and then it's going to drop. So I might be looking for a stock like that. I might look at, I don't want to say Alibaba, but I've seen some Alibaba charts and some large block orders that are on the bearish side. So I actually thought Alibaba might be able to run to 106. I mentioned it the other day. It was 100 or under 100. It ran up to 102.50 and then subsequently dropped. So since it dropped from 102.50 and we're under the $98 and we're under the $99 and it's still seeing some hesitation here, then I'm thinking, where could Alibaba go back down? Alibaba could go back down to what, $92. So the fact that we're at $97 and I'm saying bear case scenario 92, no, not today, but you have Wednesday, Thursday, Friday. So I might look like something like that for a bear case scenario. Again, it depends whether they buy the dip. For me, honestly, I'm not entering any AMD, Starbucks, Uber. I'm just making suggestions. No Coin, Meta, Baba. Just suggestions. What I'm looking to play today is probably 0 days till expiration options. The same plays I made yesterday. I used the dark pool levels, which I mentioned, $450, $451.77, $453.47, $455.17. When I see it reject a dark pool level because volume is being forced on the market, then I know the market's going down. And if it's going down from one level, let's just say 453.47 is one level. The next level under is 451.77. So if I'm playing 0 days till expiration and I get $1, what, $1.70 move, 1.7 point move. I'm probably going to be able to take what, 60 to 70%. Now, if I don't want to get crazy and I don't want to absorb the risk, I want to make more of a scalp play. Yes, I'm trying to get in when I see support, but let's say I miss 2 or 3% on the bottom side when I hop in. So the bottom is 2 to 3%. Let's even say 5% lower. Okay. Now, 5% lower, we're going up. And again, these options would return 70%. I don't need 70%. If I know I missed 5% and I was looking for 35%, I might only take 30%. So if I'm in at like $70, the low is 65, I might say to myself, $70, 30% is 91. Okay. So 91, I might nibble on the way out and put $93. Grab that extra $2 per contract. Let's say I had 54 contracts like I did yesterday. That's an extra $108. On small accounts, it makes a difference. I'm talking about my small account. When I had 25 straight trades going into 2 days ago, the account just went straight up like that. Again, when you're taking losses, you want to minimize your losses. All right, so that's how I would trade the market. This is funny. This is what I wrote the other day. Just buy AMD dips. That was on Monday when I was talking about how we're entering Monday. Just buy every AMD dip. Realized that AMD had earnings yesterday, so I'm not sure that strategy is still working. However, AMD did get the upgrade. AMD was up as much as 5% overnight. It dropped because the market dropped to flat. It's probably up 2% this morning, if that. Let's just see where it is. Right, AMD 2.59%. Again, so if you want to be bullish, you're looking for a dip, you're going to buy the dip on AMD. You could buy the dip if you think the market's going to be bullish, maybe a Starbucks or an Uber. If you want to be a bear, I might look for something, again, that is overinflated or had a good run lately. Let's remember, I was in Plug, Affirm, Upstart, Roblox might have had a little pop. You're looking for negative stocks. Again, when the market spikes, you're looking for pops so that we can go down. So again, your scenarios, if I had to predict, I'd say I'm 80% sure we touch a number with 452 today. 50% sure we touch a number with 451 today. And although I think it's going to happen, I'd say I'm only about 25% sure we touch a number with 450 today. With that said, everybody have a wonderful trade. If you like what I'm doing, please thumbs up. All right. And I'll see you guys tomorrow. I'm heading over to Discord. We're going to drop the Discord video.